Hello, welcome to my channel. I am Dada Elias, a founder of ISME Accounting Tutorial, a subsidiary of Edo Impata Channel. Every business owner must set up the cash book to display the business monthly receipt and payments. As a result, in today's video, we will examine how the single column cash book is prepared, while other types of cash book will be explored in upcoming videos. Before we get started, don't forget to click that like button if you find this video helpful, as it really helps out the channel. And don't forget to click subscribe and turn on all the notification buttons to this channel so that you see more videos just like this. Okay, before we continue, consider our learning objectives. By the end of this lesson, you will be able to perform the following. 1. To talk about the contents of a single column cash book. 2. Examine the techniques for preparing a single column cash book. 3. At the end of the month, prepare a single column cash book for your small business. Level or types of the cash book. Basically, there are 4 main types of the cash book, which are below, namely: 1. Single or one column cash book. This is where cash transactions are recorded. It just has one column for the amount, which is cash, though. Number 2. Double or 2 column cash book. This is where both cash and bank transactions are recorded. As a result, it contains separate columns for cash and money in the bank. Number 3. Triple or 3 column cash book. This is where cash and bank transactions, as well as discounts received and allowed, are recorded. A 3 column cash book, on the other hand, contains a cash column, a bank column, and a discount column, representing discount received and allowed respectively. Number 4. Petty cash book. This is where daily minor or little expenses are entered. Now let's go to the definition of single column cash book, which is our focus in today's video. Now, what is single column cash book? It is a subsidiary of the original entry book of account that is used to record the day-to-day cash transactions of a businessman. In a nutshell, it is a type of cash book that is used for recording receipts and payment of cash transactions only. Conclusively, the cash book records all cash transactions that affect the increase and decrease in the cash balance of any given business owner. Therefore, it is usually called a cash account. That is, it records the cash inflows and outflows of any given business. Therefore, it is usually a cash column only. It is important to remember that credit transactions cannot be recorded in the cash book at all. Now, let's move to the general terminologies of a cash book. Number 1. DR. This represents the debit side of the cash book. 2. The credit side is indicated with CR. Number 3. Date, that is the year, month, and exact day of each cash transaction, are entered in the cash book's date column. Number 4. Particulars. The account titles or narration that will be debited or credited as a result of each cash transaction are entered in the particulars column of the cash book. Details is another name for this column. Number 5. Folio. The page number of each ledger account listed in the cash book's particulars column is entered in the folio column. Number 6. Amount. The money worth of each cash transaction is recorded in the amount column of the single column cash book. Number 7, capital. Simply said, this is the amount of money accessible to start the business. Number 8, balance brought forward. This is the business opening balance at the start of the month. Balance B/F is a common abbreviation for balance brought forward. Number 9, balance carried down. This is the cash book's closing balance. It is the difference between the sum of the contents on the credit side and the sum of the contents on the debit side. That is, the balance that results from subtracting the total value of the credit side from the total value of the debit side. Specifically, the available balance or cash at hand. The term is frequently shortened to balance C/D. Keep in mind that the total amount on the debit side is always higher, greater than the total on the credit side. This is so that the payment can be greater than the cash in hand. Number 10, balance brought down. This is the cash book's closing balance that is carried over to the following accounting period. Typically, it is shortened as balance B/D. It is time to give the format of single column cash book. The basic rule for cash book are that all receipts are debited while all payments are credited. Let's talk about the debit side first. When the business owner receives more money to the cash in the business, such will be debited. That is, all cash transactions received are debited. Summarily, all transactions that increase the cash or that allow cash inflow in the business are recorded on the debit side of the cash book. Now to the credit side. All payments are credited. Likewise, when the businessman owner pays cash out from the purse of the business, such money will be credited. That is, all cash transactions paid out are credited. In a nutshell, all transactions that decrease the cash or that result in cash outflow in the business are recorded on the credit side of the cash book. Based on the format of single column cash book, on the debit side, we are having our date column, particulars column, folios column, and amount column. The same thing happened to the credit side of the cash book. All these have been explained earlier. Now let's move to the illustration. Let's look at this illustration. From the following particulars, compile the single column cash book of Mr. Smith Philip for May ended 2020. We are having series of transactions made by Mr. Phillips during the month of May 2020. Therefore, we are asked to prepare the cash book for these very particular transactions. Let's move to the solution. Before moving to the solution, let me introduce this first, since I think it is important before continuing with the solution. Therefore, always title your account. Your marks during the examination start from there. Besides, these 3W attract marks during examination. Keep in mind that every account must have headings or titles. As a result, I designated the headings or titles as 3Ws or W raised to power 3. The first W stands for who, that is, who owns the account. E.g., consider Mr. Smith Philip from the illustration given. The second W stands for what? What kind of accounts are you preparing? For example, is it a single column cash book or bank reconciliation statement, trading and profit and loss account, or manufacturing account, or partnership account, and so on? The third W indicates which. This W denotes the year in question. The title of the account must specify the year for which it is being prepared. For instance, it is frequently dated for the year ended ... Now, let's go to proper solution. Our headings for the cash book is as follows. In this illustration, we are having Smith Philip as our first W, which stands for who. Then the second W, which stands for what? What type of account are we preparing? We are preparing the single column cash book. Therefore, the single column cash book will be the heading of the type of account we are preparing. Now let's move to the third W, which stands for which. That is, which year are we preparing the account? Therefore, we are going to write for the... Let's start the recording of the item. The first item on the list from our illustration, we are having it as May 1st, cash in hand, 4,000 naira. Do you know which side of the cash book to record this? Yes, I do. Which side, if you do? It is the debit side, of course. You are very correct. But can you tell me the reason for debiting it? Yes, I can. The cash in hand, which is 4,000 naira, represents the last cash balance for the previous year, and it is used as the balance brought forward for the current year. This is an excellent explanation. Then I record it on the debit side. Now let's move to the second item, which goes thus. May 2nd, started business with cash of 2,300 naira. From the explanation so far, can you tell me how to treat this item? This is treated as capital, and it adds to the cash available in Mr. Smith's business. Because of this, it is recorded on the debit side of the cash book. This is awesome. You are very right. Here it is on the debit side. What next do we have after the second item? What we have is that on May 3rd, stationery bought 200 naira. Who can tell me how to treat this item? I can. I am listening. It is treated as payments made by Mr. Smith Philip, and therefore decreases the cash in his business. So, it is posted to the credit side of the cash book of Mr. Smith as his cash outflow. This is a great explanation. I write it on the credit side of the cash book by recording it on the credit side of the cash book. Here is the fourth item. May 5th, cash paid to Walex, 650 naira. Jackson, can you please explain to us how to treat this item? We are going to treat it as payment made by Mr. Smith to Mr. Walex, who might happen to be his customer, and thus affects the cash available in the business by decreasing it. So it is recorded on the credit side of the cash book. What a good response from you, Jackson. You are 100% correct. Here it is on the credit side. The fifth item read thus: May 7th, received cash from Wilson, 1,200 naira. A. Thompson, do you know how to treat this transaction? Yes, I do. It is treated as receipts that indicate cash received by Mr. Smith Philip from Mr. Wallace, a customer of his. This is additional cash to the available cash inflow in his business. It is thereby debited to the cash book. Oh, what a brilliant explanation. You are very correct. I record it as well on the debit side of the cash book. Now, let's move to the sixth item, which states, May 9th, goods sold for cash, 2,300 naira. Adex, can you give a brief explanation of the treatment of this item? Yes, I can. Then go ahead. This transaction is a plus to the cash available in Mr. Smith Phillips' business because he received more cash for the goods sold to his customer. Therefore, it is termed as a receipt and will be debited to the cash book. You are very correct, Adex. You have said it all. Here it is on the debit side of Mr. Smith's cash book. Good of you, Adex. May 11th, paid for electricity 500 naira is what we have as the seventh item. Who can tell us how to treat this transaction? I can. Okay, Kenny, tell us. This transaction is a payment made for an electricity bill by Mr. Smith Philip. Therefore, it reduces the cash of Mr. Smith's business. Indeed, it is a minus to the cash balance of the cash book, and it is recorded on the credit side of the cash book. Wow, this explanation is fantastically fantastic. More grease to your elbow, Kenny. Therefore, here I record it on the credit side of the cash book. The next item in the illustration is May 12 cash sales, 1,000 naira. A. Wolex, this is your turn. What do you really understand about this 8th item in the question? My understanding about this item is that it is a receipt and thus increases the cash balance of the business purse. So Mr. Smith must record it on the debit side of his cash book. What a nice presentation. You really got it, Wolex. The record is then made on the debit side of the cash book. The 9th item says thus: May 14th, paid wages and salaries, 700 naira. Atson, kindly explain this transaction treatment in the cash book. It is treated as payment incurred by Mr. Smith Philip. Such an item decreases the cash balance of Mr. Smith Philip's cash book. It is thereby charged to the credit side of the cash book. Oh, what a brilliant explanation. You are very accurately correct. Hence, I thereby record it on the credit side of the cash book. Now, I want Thomas to explain the 10th transaction to us. Here it is, May 16 cash purchases, 1,000 naira. So, Thomas, what do you have to say about the treatment of these concerning the cash book preparation? What I can say is that it is a payment made by Mr. Smith while purchasing goods from his suppliers, whereas this really affects the reduction of the cash balance of Mr. Smith Phillips' cash book. It is then charged to the credit side of the cash book, indicating payments. You are absolutely right, Thomas. You have said it all. Here it is on the credit side of Mr. Smith's cash book. Now, this time around, I want everybody to explain how to treat the 11th item. Here it is. May 22nd, bought motor vehicle, paying by cash 2,600 naira. It is treated as payments incurred in purchasing a motor vehicle, which is an asset to Mr. Smith's business. Therefore, such a transaction decreases the cash balance of Mr. Smith Phillips' cash book once money is paid out to acquire the asset. The transaction is then recorded on the credit side of the cash book, meaning payments made out by Mr. Smith Philip. Perfect. This is a good response from you all. I will record it on the credit side of the cash book. The last item is this. May 25th. Bought goods for cash 1,200 naira. This item is a payment made by Mr. Smith Philip while buying goods from his suppliers. No doubt, such an item decreases the cash balance of Mr. Smith Philip's cash book. Therefore, it is treated as a payment and thus recorded to the credit side of the cash book as cash purchases. I thereby enter it on the credit side of the cash book. Having done with the postings of the transactions or items of Mr. Smith Phillips into his cash book, now it is time to compute the figures on both sides. Both the debit and credit side of the cash book by ascertaining the cash at hand, which indicates the balance carried down. This term is usually abbreviated as balance carried down. The total value of the debit side's content gives us 10,800 naira, while that of the credit side amounted to 6,850 naira. Therefore, the value arrived at on the credit side is thereby subtracted from the value obtained from the debit side to give us a balance carried down, which is usually shortened as the balance C/D. 6,850 naira is thereby subtracted from 10,800 naira. The result gives us 3,950 naira. Therefore, 3,950 naira is the cash at hand, which is simply put as balance C/D. Then I write 3,950 naira on the credit side of the cash book as balance carried down, which means balance C/D. Meanwhile, we shouldn't forget that May ends on the 31st, as we are preparing for the month ended May 31st, 2020. So, the date to be written on the balance carried down, which is balance C/D posting, will be May 31st once the cash book is prepared monthly. Another thing is that when calculating the value contents on the debit side and that of the credit side after recording the balance carried down, the account must be balanced. That is, the total value on both sides must be 10,800 naira each. The balance carried down, balance C/D, is written on the credit side of the cash book as the cash at hand is then brought down to the debit side of the cash book, indicating the balance brought down. Balance B/D. Note that 1st June is written as the corresponding date to this item. This shows that this balance brought down represents the cash at hand. Please post your questions in the comment section below. I hope you found this video helpful. Please remember to subscribe, like, and share the video with your family and friends. Thanks for watching. Until then, bye.